all seeing lots of changes in tax requirements worldwide, and in today's video I'm going to talk about a couple of prominent updates and trends for tax compliance in 2024. Hi, my name is Rasudan and I have been working with Nomad Capitalist for 3 years, and before that almost 10 years I have been working in the audit and tax field. So over these years we have seen lots of new trends and changes in tax compliance, and in today's video I'm going to tell you about what to expect in tax compliance in 2024. So international tax, not only international but local taxation really is something that changes pretty much daily, and we see and hear lots of new requirements and tax regulations are being adopted or updated in certain countries, and the landscape in tax compliance is constantly changing. So in today's video I'm going to tell you a couple of prominent updates and changes that we are seeing currently, and also what to expect and what's the general direction that we expect for these items to go towards to. The first thing that we observed, we have been seeing a lot and we expect it to also happen a lot in the future, is decline in poorly 0% tax jurisdictions or tax havens as we call them. These are the countries or jurisdictions where you can pay zero tax and they are maintaining these tax regulations. The case that we are seeing right now is that the countries may be maintaining this, but because of the international regulations and requirements, they do not have this much as much freedom left to do business as before. So what we mean by that is, for example, there's BVI or Cayman Islands. Those are the countries that come to your mind when we are talking about tax havens and paying 0% tax, and they are still the case. However, if you want to establish a really operational transactional business and they grow it significantly, these jurisdictions may not be the best choice for you because due to the requirements and the international the direction that the international tax is going towards, these countries are asked to provide more information, and they are put through a lot more documentation and requirements because of their 0% tax regimes. So it means that you can technically establish a business there. However, you will not have access to the, let's say, infrastructure that some other countries can provide. That can be anything like banking infrastructure, for example, because of this 0% tax haven status that these countries have. Some banks have them blacklisted because they are not sharing enough information, or they don't like the 0% tax that they are still applying to mostly everything, right? So it means that due to their tax benefits that they are providing for you, they are also getting a drawback in a couple of other items like infrastructure or ease of doing business with certain other countries. Like you may have a BVI company or a Cayman Island company, and it can be a bit difficult to establish good partnerships and relationships with some European or other jurisdictions, which you can still do that, but you will be required to provide more information and you will be asked far more questions compared to if you were established in the, let's say, European jurisdiction or something like that. So this is one trend that we are seeing with decrease in the very traditional understanding of zero tax countries and tax havens. It doesn't mean that there is no use for these jurisdictions. You can have a specific business where this is enough and you don't need further infrastructure for your business, and this also can mean that you can use these countries to have a holding company in that country where this company is not really doing any transactions, so it's just really on its own, and then you have a subsidiary in other country that it has a more flexible opportunities for infrastructure there. So there are still ways to use these jurisdictions, but it's not as prominent and as clear and just one-stop solution as it was before. Because of decline in traditional zero tax jurisdictions, we are seeing an increase in a hybrid of offshore onshore setups. So what we mean here is you can have two companies, one established in one country, another in another country, and where you get access to both opportunities in different countries. So this can be anything like, for example, you can have a company in Hong Kong and then have a subsidiary in the US, because US still has a very good opportunity with the US LLCs. That doesn't work for everything and everybody. But if you can establish it with certain conditions, you can enjoy the infrastructure that the US provides with different access to good banking, and also the tax opportunities that Hong Kong provides, especially with the offshore tax exception regime that they have. So we are seeing this model being pushed more compared to completely zero tax countries, and there are lots of like situations where this can work. Like, for example, you can have a Singapore LLC or a Switzerland company, like different countries, and this model, onshore offshore combination, can work very well for you. Having said that, a very logical question that you may have is, where should 2024 entrepreneurs go for their business? And the answer to that, it really depends on your business and lots of like different conditions. But as a general answer, we can tell you to go like with the onshore offshore hybrid. Anything like US LLC or Swiss LLC or Singapore LLC could be a solution for you, or a combination of those with BVI companies or Cayman Island companies or something like that. This means that you have access to a really like a powerful financial hubs like Singapore, Hong Kong. They are really well established in Switzerland. They have like ordinary tax systems, right? They have their tax rate, corporate income tax, etc. But they also provide certain tax exemptions or benefits for certain types of businesses that, if applicable to you, it means that basically you are in these countries, very well established countries, but you are also enjoying 0% tax there, or like close to 0% tax there. And these are like hidden gems in their tax systems that we at Nomad Capitalist really look for every day, and then try to offer that to our clients at Nomad Capitalist. We see a trend where it's better to maybe live in a high tax country, but under certain exemptions enjoy this benefit of very low tax or zero tax. So what we are seeing right now is an increase in establishing a company and a business in, let's say, a lump sum country in Europe, or a lump sum tax country in Europe, or maybe a non-dom country in Europe, where there is a usual tax rate, but because of some certain exemptions and conditions, you can enjoy a lower tax rate or a zero tax rate. If we decide to go into detail with different countries and like local updates, I think that the overall trend is the same in every country. Everybody is becoming a bit more strict with the information. They are more demanding with sharing information between each other, also demanding more information from taxpayers. For example, Europe is witnessing a huge update in OECD's Pillar 2 framework, where basically the whole region is working towards making sure that all the businesses are paying 15% tax, and it's the same in every country. And I think that this is the trend that we are constantly seeing in different countries, where they are trying to establish a worldwide standard and make sure that tax is not something that countries are competing about, because essentially good tax system means that countries are competing for your business to move to that country, and we're like seeing them gather around each other and establish and offer to have the same kind of tax system, so that this is not what defines where your business goes. So we see lots of European countries follow in that step and update their local requirements to align with this European standard. The same on another level can be said about the US, for example, where they are also adding more requirements to providing information about your ultimate beneficiary owner. That has never been the case in the US, but they have been increasing the bans there. We also see them being a bit more strict with crypto payments, where you are obligated to provide information about the crypto payments that you receive over $10,000, which was the case for like cash payments before, but now that the same thing pretty much applies to crypto payments as well. So this is the trend where you are asked to provide more information, and usually we can also agree that when you start providing more information, they find more things to tax you on. So I think that now is the better time to start working on your international tax strategy and make sure that you have a solution before you are facing the problem there. And for that reason, it is a very good idea to have a trusted expert in the tax field. So feel free to reach out to nomadcapitalist.com.